Studio, powered by Century Ply, now with firewall technology.
Welcome back. You're watching us here on Halftime Report. An interesting discussion now for you, and this is with regards to the logistics space. Remember, over the last 1 month or so, we've seen some focus in this arena, and that's primarily because of the big listing that took place. And every time that happens, you know, everyone is forced to look at other players in this space as well. There are brokerage notes, etc. We've seen a couple of initiating coverages coming on delivery. Of course, brokerages are, split on how that pans out. Some extremely bullish on the long-term prospects, some worried about the valuations. Whereas there have been other players also which are profitable, which are finding the eyes of all the brokers. So let's get in Ram Praveen Swaminathan, who's the MD CEO at Mahindra Logistics, to discuss their business as well as the prospects for the industry going ahead. Thanks a lot, Mr. Swaminathan, for joining in. You know, from the time Mahindra Logistics has listed, you'll have transformed the business quite a bit. In fact, in FY22 itself, if I look at it, your revenues have grown at 25%, EBITDA growing at 55%, with the net profit growing at 24%. You've increased your supply chain solutions coming in, you've increased your warehousing operations, etc. as well. So can you tell us what are the blocks that you're putting in place for further growth for the company? And in light of that, what's the kind of growth that one can expect in FY23 and FY24?
So I think, we've been really focusing on 3-4 things. The first one, I think, is, historically we are dominantly a 3PL business, and that's where we've been trying to drive a migration towards end-to-end solutions. Solutions provide us larger order sizes, provide greater integration with the client's operations, and allow us to have a more value-driven approach. The second one has been growing our what we call our network transportation businesses. That's freight forwarding, last mile delivery, and B2B express. Those businesses have grown well, and over the last 3 years have moved from around 5% of our revenue to close to 20% of our revenues. Right? And then the third thing, of course, is kind of transforming our mobility business. Underlying that, of course, is a lot of work on digitization, driving more consistent operational excellence, and driving more purchasing excellence in the system, right? But that's kind of been the big focus for us.
Okay. Mr. Swaminathan, business has probably seen some kind of a headwind because of crude prices this year, fuel prices. Tell us, how exactly does it impact your business? Is demand lower because of that? Are you passing on all of the costs?
I think from a pure margin perspective, we do have, we do largely pass out all the increases, because that's the way we are contracted. We contract with our clients. So there is at sometimes some limited timing impact, but for the large part, it's passed through. I think the larger impact is the overhang from an economy perspective, because obviously we are seeing a lot of pressure from our customers in terms of network expansion. So there has been a slowdown in terms of of order intake, right? Or the pipeline itself has softened a little bit as customers try to just push back some of the network expansions, and that's where I think we've seen the most telling impact.
So what do you mean by slowdown in order intake? For example, if you had to compare it same time last year, what would it have been, and what is it currently, and what are you forecasting?
Sure. So I think if you look at our business, we are really an enterprise B2B business model for the large part. So we do, our business is predicated on long-term contracts with our clients. And most of our existing contracts have actually been are working quite well. I think they're holding volume. There is some amount of volume growth in those existing contracts as well. But the addition of new contracts is where we have seen some slowdown. Right, we're still tracking to our growth targets, but we have seen some slowing down there.
What are those growth targets, if you could quantify them?
No, so I think we have set a long-term vision, Mangalam, which is to be, to grow the business to roughly around 10,000 crores in revenue, and drive an underlying kind of EBITDA and PAT improvement over the next 4 or 5 years. That still remains the vision for the company, and and that's kind of what we are still, aspiring to go after.
What's the timeline for 10,000 crores in the top line?
Well, I think our vision has been to try and do it in the next 4 or 5 years, right? Obviously, things move up and down. We don't give guidance, but that still remains the broader strategic vision for the company.
So this entire order intake slowdown that you've seen, maybe a little bit of demand softness, has that changed the ratio of Mahindra versus non-Mahindra business? Are you concentrating more on Mahindra business now simply because you know that there is some amount of continued revenue visibility? Where does the ratio stand? Has it changed, and what is your guidance?
No, nothing has changed materially. I think, as I said, a large part of our business is actually existing contracts, and those still continue, right? And therefore, there has really been no material impact from a revenue perspective for us in terms of a slowdown. It's just the pace at which we're accelerating, especially on the non-Mahindra side, is probably slowing down by a quarter or so. So, as I said, our broader prognosis for demand still remains positive because we think sectoral macros and overall macros are still very positive for us.
Could you give us a sense of how autos will pan out this year? Because, you know, there were semiconductor shortages, etc. That accounts for about 16% of your revenue. It grew lower than your non-auto business in FY22, but still a 14% growth is by all means, no mean feat. So what's your outlook on how that business grows? And while you talk about that also, at 10,000 crore, what does your revenue look like? How much comes in from Mahindras? How much comes in from autos? How much comes in from the last mile, which currently is 20%?
So I would say, just to correct some of it, I mean, our automotive business is roughly around 20-25% of our revenue. And obviously that's been impacted by the chip shortages. But we are seeing a positive trend. And as I mentioned earlier, we expect the second half will see a very strong and secular recovery, right? At least from our OEM customers, Mahindra and non-Mahindra. To the other question you asked in terms of how we see the future, obviously a large part of our growth is going to come from the non-Mahindra side. We have a very strong and dominant position with Mahindra group companies, including the auto and farm businesses. So our real focus really is going to be on growing the non-Mahindra part of our business, which, as we look forward, will end up being, obviously much higher than the 50% or 52% of our revenue it constitutes today. Now, we do expect to hold our network services business, not the last mile delivery business, smaller part, but our overall network services, which includes forwarding, last mile, and B2B Express. We expect that to be in the 25% to 30% range as we look out over the next 4-5 years.
Okay, we're going to leave it on that note. Thanks very much for joining in and providing all of that perspective. That's Mahindra Logistics. Stock has been a bit of underperformer. It's down around 30-odd% in the past couple of months. It's down over 20-odd% in the past 1 year odd. We need to take a short break, but up next we're going to get talking about the technicals. Manas Jaiswal will join in with his trading strategies on what is a weekday. Stay tuned.